Welcome to our deep dive into fintech in 2024.
Yeah.
Our guide for this journey is going to be the Future of Fintech Report 2024 from Silicon Valley Bank.
Great report.
We're going to be looking at all kinds of things like how generative AI and the, changing investment landscape are really shaking things up.
Absolutely.
And we'll also, of course, talk about the relationship between fintech startups and those big traditional financial institutions.
Yeah. It's a sector that's always evolving, always changing, facing challenges, but also tons of opportunities.
Right.
So let's dive in and see what we can glean from this report.
It's good.
What it means for entrepreneurs, investors, or really anyone who's just interested in the future of finance.
Okay, let's jump right in.
Let's do it.
So the report starts off by talking about this Gen AI revolution, which sounds almost like something out of science fiction.
It does.
But it's really happening, and
Yeah.
it's impacting fintech in a big way.
Hugely.
So we're talking about AI that's not just, crunching numbers,
Right.
but it's actually generating insights,
Yeah.
giving personalized financial advice,
Mm-hmm.
and even automating things like compliance tasks.
It's really incredible to see the impact it's having,
Yeah.
both on those big established financial institutions, the legacy players,
Right.
and then these new AI native startups.
Right. So the legacy companies, they're kind of using AI to boost their efficiency.
Yeah, like a turbo boost.
Right. Try to cut down costs.
Exactly.
And then you have these startups that are building their entire business model around AI.
Just really fascinating.
Yeah, it is.
Like they're creating something from nothing.
Yeah, and the report has some really interesting examples,
Yeah.
like Secure, which uses AI to detect fraud.
Oh, yeah. Secure's great.
Yeah. And then there's Vic.ai, which is using AI to streamline B2B payments, automating things like invoice processing.
Which can be a huge headache for businesses.
Oh, absolutely, yeah.
So anything that can help with that is welcome.
Yeah, for sure. And then there's this really cool platform called Story Protocol.
Okay, haven't heard of that one.
Yeah, it's using AI to help creators like artists, musicians, writers
Wow.
manage their intellectual property.
That's really interesting.
It is, yeah.
I mean, with all this focus on AI, though,
Right.
I wonder if it really gives anyone a real edge.
Yeah, that's a great question because if everybody's using it,
Right.
does it really give you a competitive advantage?
Exactly.
And the report seems to suggest that just having the best AI is not enough.
It's not a magic bullet.
Right. You
Yeah.
need more than just the technology.
You need a good foundation.
Right. And so the report talks about things like data lock-in,
Right.
which is kind of like how hard it is to switch from, one social media platform to another.
I see. Yeah, it makes you think of all the content you've shared.
Right, exactly. And once you've built up that network, it's tough to leave.
It is.
And then the report also talks about building relationships with your customers.
That's key.
Right, and offering them a diverse set of services, things that they really value.
Not just one thing that they might get bored of.
Right, exactly. So it's about building a holistic kind of ecosystem.
Like building a house.
Yeah.
You need a strong foundation.
Right,
And AI is just one part of that.
exactly. All right, so let's shift gears a little bit and talk about investment.
Okay.
Because the report paints a very different picture than we saw, just a couple of years ago.
Definitely things have changed.
Yeah, remember all that talk about easy money flowing into fintech?
Yeah. It felt like everybody was getting funded.
Right. Those days are fading fast.
Yeah.
Venture capital investments are shrinking.
Yeah.
And those mega deals that used to make headlines,
Right.
those are becoming much less common.
Definitely seems like investors are getting more cautious.
Right. And the report points to a couple of key factors driving this shift.
Mm-hmm.
One is the end of the zero interest rate policy.
Yeah, free money is gone.
Right. And then the other is rising customer acquisition costs.
Right. It's getting more expensive to acquire those customers.
Exactly. And so investors are being much more discerning.
They have to be.
Right. They want to see a clear path to profitability
Definitely.
and sustainable growth.
Makes sense.
And the report actually uses this term,
Yeah?
Seedpocalypse.
Ooh, that's a scary word.
It is, and it refers to the fact that, a few years ago there was so much seed funding available
Right.
that it created this huge backlog of companies
I see.
all vying for that next stage of funding.
Right, that Series A funding.
Right, exactly. And so it's a real bottleneck.
Yeah, a lot of companies stuck in limbo.
Right, and it's forcing fintechs to really focus on proving that they can actually make money.
Right.
Inflated valuations are no longer cutting it.
Nope. Investors want to see substance, not just hype.
Right, exactly. So what are fintechs doing to adapt to this new reality?
Well, that's a great question.
Well, the report points to a growing trend of collaboration
Oh, interesting.
between fintech startups and those big traditional financial institutions.
Okay, so they're joining forces.
Yeah, we're seeing partnerships, investments,
Yeah.
even outright acquisitions.
So it seems like those big banks are realizing they need to get on board with the digital revolution.
Yeah, they're seeing that customer demand for digital solutions is only growing.
And they're turning to fintechs to help them get there.
Right, and the report has some great examples like JP Chase.
Yeah, one of the biggest names in banking.
Right, they acquired WePay to boost their online payment offerings.
Smart move.
And then you have Wells Fargo partnering with Built Rewards.
Okay, I've heard of Bill.
Yeah, they're making waves in the credit card rewards space.
Interesting.
Yeah, so these are just a couple of examples of how these collaborations are playing out.
It makes sense both sides have something to offer.
Right, and the report also dives into the increasing scrutiny on banking as a service partnerships, or BaaS.
Right, where fintechs basically piggyback on a partner bank for things like holding deposits.
Exactly, and regulators are getting concerned about the potential risks involved.
Yeah, especially with all the focus on data privacy these days.
Right, and you can't ignore the recent collapse of Synapse, which was a BaaS startup.
Yeah, that definitely sent shockwaves through the industry.
It did, and it really highlighted the need for tighter controls and better risk management.
For sure, fintechs can no longer treat regulatory compliance as an afterthought.
Right, it has to be baked into their DNA from day one.
Absolutely. In this environment, every fintech also has to think like a compliance company.
It's a must-have for survival.
Absolutely.
Okay, so now let's talk about those unicorns.
The mythical creatures of the startup world.
Right, and the report calls this the unicorn dilemma.
Okay, I'm intrigued.
So remember all those fintech companies that reached unicorn status?
Meaning they were valued at over $1 billion.
Exactly, and it seemed like every other week a new fintech unicorn was being born.
Yeah, it was a wild time.
It was, but the report suggests that many of those valuations were inflated.
The bubble had to burst eventually.
Right, and so now these companies are facing this really tough situation.
What do you mean?
Well, exit options are shrinking.
Right, IPOs are down, acquisitions are down.
Exactly, and many of these companies are struggling to grow into those sky-high valuations.
It's like trying to fill shoes that are 3 sizes too big.
Right, and so the report has this term for them.
Let me guess, false unicorns.
You got it. And these false unicorns are finding themselves in a real bind.
So what can they do?
Well, the report suggests a couple of things.
Okay.
Some of them might need to consider restructuring their cap tables.
Meaning renegotiating the terms with their investors.
Exactly. And that could involve things like converting debt to equity or issuing new shares.
Tough decisions, but sometimes necessary.
Right. And then another option, and this one can be really tough to swallow,
Yeah.
is accepting a lower valuation.
In a future funding round or when they exit.
Right. It's a blow to the ego, but it might be the only way to stay afloat.
A reality check for some of these companies.
Exactly. But it's not all doom and gloom.
Oh, good.
The report actually highlights a success story, Ibotta.
Ibotta, yeah, I've heard of them.
They're a consumer fintech company, and they actually managed to successfully IPO this year.
Wow, so it's still possible.
It is. And their secret was they got their house in order.
Meaning?
They streamlined their operations, showed a clear path to profitability.
Smart?
Yeah, they
yeah.
focused on creating real value for their customers, not just chasing hype.
A valuable lesson for other fintechs.
Absolutely. So, as we've seen, the fintech landscape is changing.
It always is.
The free money party is over.
Right.
Regulators are cracking down. Competition is heating up.
It's a challenging but exciting time.
It is, and amidst all of these challenges, innovation in fintech is still going strong.
That's what's so great about this sector. It never stands still.
Exactly, and the companies that can adapt to these changes, focus on their customers, and build sustainable businesses will be the ones that shape the future of finance.
Agreed. Those are the companies to watch.
So the report wraps up with some advice from some of the top fintech investors.
Oh, I'd love to hear what they have to say.
Yeah, and their message boils down to this.
Okay.
In this new reality, success requires going back to basics.
Back to basics. Interesting.
Right. They highlight 3 key things: strong fundamentals, rigorous compliance, and delivering real value to customers.
Solid advice.
Right. Technology is important, but it's not enough on its own.
You need more than just a shiny app.
Exactly. You need to solve real problems for real people.
That's where the real innovation lies.
And that's what makes this space so exciting.
It is. Even with all the challenges, the innovation engine is still hunting.
It is. And one of the most striking things from the report is just how much is happening in the world of AI.
Yeah, we're seeing companies use AI to personalize financial advice, automate those complex tasks, even create entirely new ways of doing business.
Right. And it's not just about making small improvements. This is about fundamental change.
Generative AI really has the potential to revolutionize how we interact with money and financial services.
Exactly. And the report ends with this really thought-provoking question.
Oh, I love a good question.
If generative AI is the next big bang in fintech history, how will it redefine our relationship with money and financial services?
That's a question worth pondering.
It is as we watch this space evolve.
You know, it's interesting to see how these investment trends
Yeah,
are playing out across different parts of the fintech world.
that's a great point. And the report actually breaks it down by category.
Oh, does it?
Yeah, and you can really see that some areas are hotter than others.
Makes sense.
So, for example, business financial software is still attracting a lot of investment.
Okay.
But
Oh, yeah.
things like crypto and blockchain,
Right.
those have cooled down considerably.
Well, yeah, I mean, with all the volatility in crypto markets lately and the increased regulatory scrutiny,
Right.
it's not surprising that investors are maybe looking for something a little more stable.
Right, something a little more predictable.
Yeah.
And it seems like they're finding that in areas like payments and embedded finance.
Embedded finance. Yeah, that's a hot area.
It is. And the report highlights how this shift towards embedded finance, where financial services are integrated into other platforms.
Right.
You know, like buying something online and having the option to finance it right there.
Yeah, that's a great example.
It's creating new revenue streams and distribution channels for fintechs.
It's all about meeting customers where they are.
Right.
Instead of expecting them to come to you,
Right.
you're bringing financial services directly to them.
And the report points out that this can be a really clever way for fintechs to tackle those rising customer acquisition costs.
Oh, absolutely, because you're partnering with companies that already have that customer base.
Right.
So you don't have to spend as much on marketing.
It's like a shortcut to growth.
Exactly.
All right, so let's talk about exits.
Okay. The ultimate goal for many fintechs.
Right, because that's how they're going to make money for their investors.
Exactly.
And the report paints a bit of a mixed picture here.
In what way?
Well, on the one hand, exits are down overall compared to last year.
Yeah, that's not surprising, given the market conditions.
Right, but there are still some companies managing to make a successful exit.
Okay, so it's not impossible.
It's not, we talked about Ibotta earlier.
Right, their IPO.
That's a great example.
Yeah, it shows that it can be done.
But the report acknowledges that the exit market has gotten a lot tougher.
In what sense?
Well, acquisitions are down,
Yeah.
and many fintechs are finding it difficult to command the valuations they once dreamed of.
Ah. So those inflated valuations for the VC boom are coming back to bite them.
They are, and so they're kind of stuck in this awkward position.
How so?
Well, their exit options are limited,
Right?
and they're struggling to grow into those sky-high valuations.
It's like trying to wear a suit that no longer fits.
Right, and so the report suggests that some of these false unicorns
Yeah.
might need to make some tough choices,
Like what?
like restructuring their cap tables,
Okay.
or even accepting lower valuations.
Yes, to secure an exit.
Exactly. It's a bitter pill to swallow, but it might be the reality of the current market.
Sometimes you have to adjust your expectations.
Right, but there are some bright spots, though.
Okay, tell me more.
The report highlights how some fintechs are navigating this challenging environment by really focusing on efficiency.
Or, making every dollar count
Right.
and extending their cash runway as far as possible.
So basically doing more with less.
Exactly. They're doing the hard work necessary to weather the storm.
And come out stronger on the other side.
Right. And speaking of weathering the storm,
Yes.
let's circle back to regulation.
Oh, right. We talked about that earlier.
We did, and the report really goes in depth on how the regulatory landscape is changing.
And what that means for fintechs.
Exactly. And the key takeaway here is that regulation is only going to get tougher.
So fintechs need to adapt.
They do, and they need to adapt fast.
The move fast and break things mentality is long gone.
It is, and the report specifically points to the increased scrutiny on base partnerships.
Oh, right. Those banking-as-a-service partnerships where fintechs rely on a partner bank
Exactly.
for things like holding deposits.
Right, and the FDIC, which ensures deposits in U.S. banks, they've raised concerns about the potential risks in this model.
Yeah, it makes sense. They want to make sure everything is safe and sound. Right. And so fintechs that rely on BaaS need to be prepared for more oversight
Right.
and stricter compliance requirements.
It's just the cost of doing business in this space.
It is, and it's not just BaaS partnerships either.
Oh.
Regulators are taking a closer look at the entire fintech industry.
So what kind of things are they looking at?
Well, data privacy, anti-money laundering, measures cybersecurity.
Wow, so everything's under the microscope.
It is, and the report emphasizes that fintechs need to build compliance into their DNA from day one.
It's not optional anymore.
It's not, it's a necessity.
I guess that makes sense in this environment.
It does, and the report actually suggests that this stricter regulatory environment could create opportunities for some fintechs.
Oh, interesting. How so?
Well, especially those that specialize in compliance technology.
Okay, so as the compliance burden grows,
Right.
financial institutions are going to need help managing it all.
Exactly. And fintechs that can provide those solutions, they're going to be in high demand.
It's like the saying, when one door closes, another one opens.
Exactly. So we've seen that the fintech landscape is in a constant state of flux.
It always is.
The VC boom is a distant memory. Regulators are tightening the screws. Competition is fierce.
But amidst all those challenges,
Yeah.
there's this persistent energy, a drive to innovate.
That's the beauty of fintech.
It's constantly adapting, evolving, finding new ways to do things.
And the companies that can embrace these changes,
Right.
focus on what their customers need, and build sustainable businesses.
Those are the ones that will thrive in this new reality.
Exactly. So the report wraps up with some advice.
Oh, good. I love advice.
From leading fintech investors.
Okay, the people who are writing the checks.
Exactly. And their message is this.
I'm listening.
To succeed in this environment, you need to go back to basics.
Back to basics, huh? Interesting.
They stress the importance of strong fundamentals.
Okay, meeting.
A solid business model, a clear path to making money,
Right.
rigorous compliance.
Which is no longer optional.
Not at all. And of course, delivering real value to customers.
That's key.
Technology is important, but it's not enough.
You can't just build a fancy app and expect it to sell itself.
Exactly. You
Yeah.
have to solve real problems for real people.
And that's where things get really exciting.
It is. Even with all the headwinds facing fintech, the innovation engine is still humming.
I love that analogy.
And one of the most striking takeaways from the report is the sheer scale of innovation happening in AI.
Yeah, we're seeing companies use AI in so many different ways.
We are from personalized financial advice to automating complex tasks to creating entirely new business models.
It's mind-boggling.
And it's not just about incremental improvements either.
Right.
Generative AI, like the technology behind ChatGPT, has the potential to fundamentally change how we interact with money and financial services.
That's a really exciting thought.
It is, and the report leaves us with this question.
Okay.
If generative AI is the next pivotal moment in fintech history,
Yeah.
how will it redefine our relationship with money and financial services?
That's a question worth pondering.
It is as we watch this space evolve. Okay, so we've talked a lot about the fintech landscape, what's happening with investments, AI regulation, all that good stuff.
Yeah, it's been a really fascinating dive into the report.
It has, but now let's bring it back to you, the listener.
Right, because ultimately this information is only useful if you can apply it somehow.
Exactly. So whether you're an entrepreneur thinking about launching a fintech startup, or an investor looking for the next big thing, or just someone who's curious about the future of finance, what can you take away from all of this?
Well, I think the biggest takeaway is that the fintech landscape is changing, and it's changing fast.
Right. The days of easy money are over those inflated valuations we talked about.
Yeah.
Those are a thing of the past.
So for entrepreneurs, that means you really need to be able to prove your worth.
Exactly. You need to have a solid business plan, a clear path to profitability, and a deep understanding of how the regulatory landscape is evolving.
And for investors, it means you need to be much more discerning with where you put your money.
Right. Don't just chase the hype look for companies that are solving real problems and that have a solid team and a sustainable business model.
And I think another important takeaway is that technology, while important, is not enough on its own.
Right. You can't just build a cool app and expect it to be a success.
Exactly. You need to be solving a real problem for your customers. You need to be building trust and relationships. You need to be thinking about the long term.
Right. And that brings us to another key point, the importance of building strong customer relationships.
Yeah, that's something that's often overlooked in the tech world.
It is, but in fintech especially, it's absolutely crucial.
Because at the end of the day, fintech is about people.
It is. It's about helping people manage their money wire, make smarter financial decisions, live better lives.
So if you're building a fintech company, Think about how you can create a truly customer-centric experience.
Exactly. Think about how you can build trust, how you can make your customers' lives easier, how you can go above and beyond just the transactional.
And be adaptable because the fintech world is constantly changing.
It is so, you need to be able to pivot, to embrace new ideas, to challenge the status quo.
And if you're just starting out in the fintech world, don't be afraid to dive in.
Yeah, there are so many resources available online, from blogs and podcasts to reports like the one we've been discussing.
And don't be afraid to reach out to people in the industry, ask questions, network, learn from their experiences.
The fintech community is generally pretty open and welcoming.
Yeah, most people are happy to share their insights.
So as we wrap up, I think the biggest takeaway is that this is a time of both challenge and opportunity in fintech.
Definitely, the challenges are real, but so are the opportunities.
The companies that can navigate this new landscape, embrace innovation, build strong customer relationships, and deliver real value.
Those are the companies that will shape the future of finance.
And the report leaves us with a really thought-provoking question.
Oh yeah, the one about AI.
Yeah, if generative AI really becomes as transformative as many people predict, how will it fundamentally change our relationship with money and financial services?
I mean, will it make financial expertise more accessible to everyone?
Right. Will it lead to more personalized financial products?
Will it change the way we think about money itself?
These are big questions, and we don't have the answers yet.
But they're questions we need to be thinking about.
As we watch this space evolve.
Because the answers will shape not just the future of fintech, but the future of our lives.
And on that note, we wrap up our deep dive into the Future of Fintech Report 2024.
It's been a pleasure.
It has. We hope you found it insightful and maybe even a little bit inspiring.
We hope it's given you some food for thought.
And until next time, keep exploring, keep innovating, and keep diving deep into the world of fintech.